Good afternoon, Europe. Good morning, my fellow Americans here. We're back.
We're
Uh,
back.
Yeah.
Back in the new year. Happy 2026. Feels very late to say that, and it is very late to say that, but we're very happy to be back on air after about a 4 week gap after our 1 hour long session describing markets. If you're still keen to see that or keen to see what Jasper's predictions are all about, and if they're still solid, you can always watch that on the Vesper site. But we're back with a new and a fresh episode. We're going to walk you through all that's happened in the meantime. We ended off the year, of course, with milk gushing all around us. And I think my first question to you, Jasper, our dairy analyst, what's changed?
To be brutally honest, not that much. We're still in the same phase. Milk is flushing all around us, and we're not even at the peak of the milk intake just yet in Europe and also the US. So more weakness in milk fat, more tightness in whey proteins. I think the couple do stand out. Milk powder, definitely you've seen some change there. But overall, no, I definitely don't see a very, very sharp change compared to a month ago.
And for those who are new here, Jasper is, of course, our dairy analyst. He joins us bi-weekly on this webinar to give you an update on everything that's happened in dairy. He's always joined by, I call it a sidekick. Some others call him head of our marketplace. But Seb, welcome. Good to have you back this year again.
Good to be back. Good to be back in this beautiful new year. Let's make it a great for dairy again.
Nice. Is the marketplace back up and running again?
Marketplace is back up and running. Started slowly the first 2 weeks. It seemed like we had a lot of people coming back from holidays. That has changed very quickly this week. We've seen a lot of bids, a lot of offers. A cross-sell feature, which is on fire these days. Almost 800 tons traded over the last 2 days. It's been extremely busy, and that's a good sign. Markets do feel weak on some markets. Indeed, S&P is on the ones that we have on the commodities side on the marketplace is the odd one out. The rest is feeling a bit weak, and there is some buyers interest, which makes it always interesting.
Nice. Well, we have a small banner at the bottom of your screen where you can click just to receive more information about the marketplace if you're keen to learn more. And for us, let's dive straight into the markets. Jasper, what's the format today? How will we go through the markets?
That's an interesting one. I wanted to prepare today's Dairy Cafe, and I had a look at the workspace I designed for the end of the year Dairy Cafe, and we'll actually be keeping the same structure. So we're starting with milk fat. After that, we're going into the milk fat is still the weaker brother amongst all the dairy commodity groups. Then we'll move on to whey proteins, a little bit about cheese, and then ending with the odd one out this week, or at least at January, which is milk powder. So starting with, I think, our weaker one, milk fat, as it was at the end of the year as well. I think the main thing there we have seen, especially European prices fall further. We've kind of broken through the 4,000 level, which was many people expected this to take place. It was very quiet in the Christmas weeks, and especially cream has become so incredibly cheap.
Did we break the 3,000 barrier?
I've heard of trades lower than 3,000, but on average, we now see that our VPIs from this week were still slightly higher. But if we go from a cream price of 315 to a butter price, or at least a cost price, it's around 2.6. So it's much lower than we're seeing today.
Yeah. Because on the spec front, can you please remind me, if we're looking at butter and at cream, at what fat percentages are we looking?
Yeah, so if we're taking the cream as we're looking at right now, it's 100% fat. On the physical market, it's not traded at the trucks that get delivered to your doorstep are 40% fat, so not 100. But the price that we show is based on 100% milk fat. While for butter, we're talking about 82 in most European cases, 80 in the US, but we have a different side of that. 82% fat for butter, and then for AMF, 99.8. So it's essentially very, very similar to cream.
Yeah.
And that's the thing. At the moment, we know that with cream prices as low as they are today, I've actually pulled up the graph. We see that cream prices actually fell through butter prices or below butter prices late last year
Mhm.
throughout December. And since then, yeah, the weaker market has just been pushed by a lot of cheap cream. Anyone who can make butter, can now make butter below 3,000 actually. And it doesn't mean that they are all going to sell it immediately. That's
Yeah.
also why we don't see a big decrease in dairy, or at least in milk fat prices. But
So
still,
yeah,
no support.
so what do they do? That basically means that it's very profitable for them to make butter right now, right?
Yep.
If they buy cream.
Yep.
But in the same time, that nobody wants to throw a lot of butter in the market, so that because they don't want the market to come down. Does that mean that cold storage is just increasing?
Yeah. Essentially, at this rate, storing your butter is one of the best things that you can do.
But how good is that for the market? Because if people are saying, "Listen, it's very cheap prices. We need a bit of a rebound."
Yeah.
That probably means that we're going to see continuously, low prices for the forthcoming time.
Yeah, I think that's I don't want to make it a very political answer, but what we've seen in previous years is that we didn't stock the butter that we needed for the second
Mhm.
half of the year, or the part where we didn't produce that much. So when the stocks were incredibly low, but consumption still remained stable, we saw the prices jumped up to
Mhm.
extreme heights. Now we're stocking up butter in a period where we also produce a lot of butter, so these stock levels are just increasing on a weekly basis, almost daily basis. And the longer we stock up now, the longer that period will be where prices are not really able to increase much because there's simply too much going around.
So we might see just this year, maybe a bit of a stable market, or at least more stable than we've seen over the last few years.
As it stands now, yes.
As fundamentals, okay.
Yeah, because that's what we've been talking about before, and I'll show you some of the fundamentals in a bit. We have been stocking butter in the first half of 2025, which is usual. So the start of last year, in the milk flush, we produce a lot of butter. Basically, what we see on the screen right here is that butter production usually is quite seasonal. H1, we have a lot more. H2, we have slightly less. And we had in H1 a lot of stock being built last year.
Mhm.
H2, we also had stock building, which was quite remarkable because you could see that, well, in this case, we're looking at German butter production. It was extraordinarily high. And now that we're moving into H1 2026, that means we have 3.5 years or a year and a half of stocking up butter, which is insane. And we've come from very low stock levels, so there was definitely some stock building necessary. But now we're moving all the way up, and that really that will last us for a long time.
Makes sense.
Before we talk about butter for 30 minutes, we're quite good at that. I think
We're very good at that.
the overall milk outlook kind of accounts with what it plays a role in all commodity markets when it comes to dairy, except for whey protein. But more on that later. The milk output is still exceptional. We still have the latest German numbers, and you can compare them to the previous years. As I mentioned in previous episodes, they weren't great in H1, but H2, the growth was incredible. I was looking at the Dutch numbers as well, on average plus 7% in the second half of the year. That's insane growth. We're probably not going to reach that in 2026, but at least this is why we're at the phase that we are right now when it comes to butter. There's just a lot of milk. There's a lot of milk fat, and we need to do something with it. And well, if milk fat and cream are as cheap as they are today, producing butter is a really, really good thing to do.
Yeah.
Go ahead.
In this chart, we're seeing, well, of course, a crazy, I think we've called it a camel to humped season. We see quite a break of season, and we're already hitting, well, almost peak flush levels in Europe. So early on so late in the year, so early in the new year. What do you expect? Does this stabilize? Does this continue to grow? What's the...
It's going to stabilize. We know the milk price has a massive effect on this, and the milk price has been lowering. So definitely this will stabilize a little bit. I think what really shows well is if you go to the milk production graph for the Netherlands. That one is not available weekly, but it is monthly. We see the 2025 numbers for the entire year. And if I standardize it to the 30-day using the functionality in the top right, you really see that this two-peak period has been playing out. But the most interesting thing is, and that's why I wanted to show you this, Fike, in January, February, and March in 2025, the milk output was quite bad. Yes, we made up for a lot of it in the second half of the year, but that means that the 2026 numbers are very, very likely to beat 2025 numbers. We mentioned this many times before, but yeah, the milk output will stay very, very green and very positive at the start of this year. It's going to flip someday. And you really see that when 2025 is already much closer to 2024 levels, April, May, that's the period when we're really going to see a contraction. It's at the peak of the milk flush, so it's quite an unusual period in the year. But that's when we really will see some of the impacts of this lower milk price, lower herd size, and a lot of other factors that will determine the milk output. Without, or at least if we look at some of the things that have been definitely a lot weaker over the past weeks, we also have one market that's been, well, let's say reaching new all-time highs. It's milk, it's whey protein. Whey protein prices and the market for whey protein concentrate has been interestingly active in the start of this year, but at the same time it shoots up to these high levels because there's simply nothing available. We have a lot of producers that get a lot of bids in on a daily basis, but they simply don't have the product that they would like to sell. So what they do is they just keep on increasing their prices. And I've talked to some producers. I've already mentioned that people can buy product for April right now. If they want something for Feb, no chance. And it's definitely creating a very, very difficult situation. Also, where if we look at the price graph, for example, and I'll zoom in a little bit to see the difference, US prices have also exceeded European prices. So the problem of this tight WPC 18 market has kind of really been driven by US pricing.
Yep.
Many European buyers cannot get their US product anymore, so they have to go for a European product. It kind of accelerates the problem, and it's really something that's driving itself up like some sort of tornado that's moving up in price. And it's 80, but it's also WPI paying almost 23 euros for your whey protein isolate is absolutely insane.
Yeah.
And it really it creates the question of, okay, where does this stop? And I have plenty of chats about this one, and ultimately what it comes down to is in the short term we don't really see this changing. We need a lot more product, and that's simply not something you can do in a couple of months.
Yeah.
Could we transition these to dollars per pound quickly for my compatriots on this side of the ocean?
They have an inkling of what's going on. Let's start with 80 again. So that means that 80 prices are $7.8 US a ton and slightly below $7.5 Australian dollars a pound.
And what if, for example, China is investing massively into new factories? Could we see maybe some increase in production coming from there and maybe actually hitting world markets to ease off some things in the coming years? I'm not saying on the short term, but just in the grand scheme of things.
That will play a role. I mean, we have product expansion in not just China, also in Europe, also in US, and then there's a lot of different places where we will see a bit of capacity growth that will play a role. There you can find on Google several different articles about who has been investing a little bit into WPI in Europe and Ireland, for example, but also WPC 18 in the US. China will ultimately also play a role there. But the thing is that we are still at the start of the consumption growth in certain proteins, especially with Ozempic and GLP-1 medication playing such a big role. I really feel like we haven't seen the end of what consumers really want when it comes to protein. At the same time, we also have a lot more other products that contain a lot of protein that are rising in popularity. So it's not just whey, but definitely I don't think that this consumption craze is going to be solved by a bit of production capacity increases. The thing that we need, and I don't have exact insights into when that will happen. Consumers are price sensitive, but at the moment, any protein bar or some of your shakes, maybe the discount has been slightly lower, but the price ultimately hasn't really been a lot higher for consumers. There's a lot of brands that still would like to keep their prices somewhat low and not really forward these increased costs for their commodities onto the consumer, because they want to win market share, make sure that they have consumption growth and a lot of green numbers. But ultimately, in this case, I'm going to go back to US dollar per metric ton. if let's say your product in Europe, I know that some products are costing around 18 euros a kg. Sorry, I'll go to euro. 18 euros a kg. If you have to pay 14 and a bit euro per kilo for your whey protein, and you're going to sell it for 18, that margin is not going to work in a couple of months' time. So we'll have to forward this to consumers. We have to, well, at least we'll start to see some demand destruction because of higher prices. Before that takes place, I don't really see a change in this WPC 80 or WPI market.
That's good.
And as I mentioned, you can have a look at, for example, the production numbers. We have production numbers of WPC 80 in the United States, for example. Yes, they're growing. They're growing at quite remarkable rates. So from 12 and a bit thousand in November last year to 15, a little over 15,000 tons. That's an increase of 20%, almost 25. But we see that consumption keeps growing, and it keeps growing so incredibly rapid that even this is not, it just, it disappears within a couple of days, so to say. I think this is the moment where we start to go into cheese.
Yeah.
Usually there would be a lot of combination between whey and cheese because they're very connected. But I think that over the past couple of months, these markets have been slightly more disconnected.
Mhm.
Yes, of course, whey markets are completely dependent on cheese. If there's no cheese being produced, we won't have any whey. So there's a lot of things that are still connecting these two markets. But overall, we definitely see that cheese markets are feeling slightly weaker while whey proteins are moving up. Our latest price levels, and I think mozzarella has a great indication, have definitely dropped. So if we compare them to, let's say, December, for mozzarella in the US, prices have dropped slightly. In Europe, we've seen it mostly stable, but rather stable.
Are you in USD now or
Yeah.
are you in euros?
Now I'm in euros.
Oh, okay.
We only see a marginal increase in the European mozzarella price.
Yeah.
And this is also what kind of characterizes this market at the moment. There's not much going on. We see a lot of interest for S&P. We see a lot of interest for butter, kind of a lot moving in these markets. But for cheese, we haven't really seen that impact just yet, which is interesting because January is usually quite a slow month for cheese. Generally, many say that in January, cheese prices fall a little bit because buyers are not really interested to lock in the entire Q2 already.
Yeah.
And at the same time, producers keep on making cheese and they need to sell.
Yeah, we are seeing that's so interesting with the marketplace. We saw some bids.
Yep.
This week. Some good volumes being booked as well for Q2, Q1, at prices that are quite relevant to what we're seeing here. So 308 for prompt that was delivered.
Yep.
So so there is some interest, but it's not. It's not massive. I think that's why we're not seeing a massive decrease or increase. It's just because it is a bit in line with production. There is interest. There is products available.
Yep.
And that's kind of everybody's almost happy at that.
Yeah. And it's I think that's not fair. Sorry, if I go ahead.
Yeah, sorry, but I'd be really keen to see. You said there's a 25% increase on the 80 production.
Yeah.
Year over year. I'd be really keen to see what the increases that we see on the cheese side. How does that hold up against that?
Yeah, so in this case, I think for that, we'll actually show you the US numbers. We have seen an increase in cheese production as well. But if I look at the year-on-year comparison, we can see it's only 5.91, which is for dairy standards, everything above 2 to 3% is extraordinary growth. So 5.91% is exceptional. But it doesn't compare to the WPC 80 production increase. And it's not just 80, it's also whey protein isolate that increased. I think the main thing that you would like to compare that with, you can only spend the whey once, and it is at the cost of something like dry whey. So dry whey, which simply has a much lower price at the moment. Production levels of these products are simply a lot lower. And this is the way that we don't, or sorry, the liquid whey that we don't put into dry whey is all going into these other product streams. Yeah. At the same time, still, that is kind of the whey stream that we get from the cheese. And this is why there is still a bit of a connection between cheese and whey. Whey prices being as high as they are today, for 80 and also for isolate, do push up dry whey and also sweet whey powder prices a little bit. So the valorization of cheese plus whey powder is quite good. Of course, it's the start of the year, so at the moment, if there's not much demand, if you produce cheese, you need to sell it quickly. So not everyone is producing cheese at the moment. But throughout the milk flash, we do expect that there will be a lot of cheese being produced, because we have built a lot of new facilities in the US, for example, but also in Europe, there's a lot of cheese production facilities. And at the same time, if the valorization of butter and skim milk powder drops because butter fat's not doing good, we might see a lot of cheese in whey being produced, which ultimately could push down a little bit on the cheese price. I don't think it will do enough for WPC80 to bring down that.
Yeah, aren't they just at full capacity already? Probably now with like the peak that we're seeing in so much milk, everything is probably actually just drying or transforming cheeses at max capacity.
No, exactly.
I'd assume so.
Yeah, it's very close to those levels. Of course, there's always the option to do a little bit more, but essentially, they're very, very close to capacity already. For cheeses like Emmental, for example, you can't really produce a lot more because all the smoking facilities. I don't know if that's the literal translation from Dutch, but there's a physical capacity constraint, and that's the case for several cheeses. And then I think it's time to look at the odd one out. Milk powder, you already mentioned it. We definitely see an increase in milk powder prices. So while we dipped below 2,000 a month ago, we're now at 213 with a European skim milk powder VPI. And if we change this into US dollar, we can also see that the US price and the Oceanian price are actually trading well above the levels that we're currently seeing the European price trading at. So in the milk powder market, definitely something has changed, and it's absolutely interesting to see how, in our view, or in my view, Oceanian market drivers, or something that changed within the Oceanian market, is kind of pulling the global market up. It's pulling Europe up, it's pulling US up, and it's creating a very competitive landscape.
I would love to take this opportunity also to make this a little bit of a battle between human and machine. Really keen to see where we are with technology as we go into milk powders. I think there's quite some things happening, but it's also a great opportunity to introduce, or to I hope a lot of you have already seen it on your screen, but to show you our newest feature. We call it the Copilot. Other people will call it ChatGPT for commodities. This is our very own chatbot trained on, people like Jasper, but only on the Vesper data. So only within the things we trust. So our analyst reports, our pricing databases, our fundamentals, our news articles, import, export, and of course our forecasts. And from now on out, we'd love to kind of compare what does our human analyst say versus what does the AI analyst say on a similar question. So maybe a question about milk powders, Jasper.
Yeah, I think it's quite interesting to ask why are S&P prices increasing in Europe. We see a large increase in Oceania, but I think it's also interesting to see why exactly European prices are increasing. Because as far as I was aware, we didn't really see a fundamental change in milk powders. There's still plenty of production taking place. We had skim milk concentrate throughout the Christmas weeks that was incredibly cheap and still trades around 1,000 euros a ton. So there's a lot of cheap milk powder that can be produced. So I didn't really see this price increase coming. And maybe it was a different region like Oceania that really pushed it up. But on the fundamentals purely from Europe, it's not something that changed. But maybe our lovely Copilot actually has a different thing.
You gave it a fun question where you asked it today. Then it's I think it's being smart. It's going to the futures as the most updated source there. What we see immediately.
What did S&P prices, or see why did S&P prices increase?
Yeah, I think the why is a good question.
Over the last weeks. So let's try again.
Well, I think it's still a good answer. Just you get what you ask for. So you see here, I think it goes quickly to futures as being the most updated source there to use on a daily basis. Well, if you're looking for a longer term, it's good to take that into account in your question.
Yeah, I mean, it did also explain straight away what is driving the firmness, and it does explain that the global powder price is not per se just a fundamental reasoning, which is exactly why I think European prices are increasing.
Yeah,
not due to fundamentals. but just following the rest of the market because it's just the cheapest out there.
Yeah. Well, that's the interesting part. And it tells me 4 different elements why we actually see a slight uptick in prices. So indeed, global powders went up. GDT results increased. So definitely has been helping European product. Incremental demand signals. Yes, we had some O'Neill tender that was closed last week. Also for skim milk powder, whole milk powder. So yeah, at least that would help to offload some powders. And at the same time, I think this is actually one of the most crucial volume or at least drivers why milk powder markets in Europe move up. If Oceania and US are trading at a premium, then of course Europe is going to take advantage of that. We have large or sharp changes in the exchange rate over the past couple of weeks, but still Europe is by far cheaper, and we can make use of that, especially to Northern Africa, but also Middle East. And sometimes I even hear that we are exporting to Mexico. We can definitely send it everywhere if we're the cheapest one. And I think what I also like is definitely it always tells me what data series it used to come up to the answer that I was looking at right now. Indeed, Feiko, you mentioned that it was using futures to indicate what the prices are today. But at the same time, I really like that we can validate this with some of the numbers that I already kind of use in my own analysis. But I really like that the Copilot is challenging me and telling me, hey, this is the stuff that you should be looking out for, and the piece of information that will help you come up to a right answer, including even some news articles and some market reports.
Yeah, and I think this is the key difference between using ChatGPT, which takes a bit of everything and you never really know where it came from. Sometimes great answers, and we've definitely used it in the past, but makes it way more difficult to check. Well, here you always get to see exactly what price series are used, what sources are used. If you want to find the report that it's based on, you can just click on it there and the link, and you go straight to that report. So you always know exactly where it's from. And it is AI. You do want to be able to check. You do want to be, especially with big business decisions, you do want to be able to go back like, oh, is it actually correct? So I think this is a really big step forward. We're really proud of it. We've given it for all of our users to try out, see what they think of it for the coming months till the end of the quarter. So we're also really keen to hear about the experience that our users have with it, the questions that they like to ask, but also where can the AI still learn?
Indeed.
I want to ask you questions about today, and then depend on futures markets. So actually, yeah, indeed, if I ask it why it increased over last week, I get a much more nuanced image where indeed international prices stopped falling, demand became more visible. It's the same indeed. It's I'm actually going to try this out a lot more to see what it can help me out with.
So far, battle human versus machine.
I mean,
should I be the judge, or I think it's more?
Yeah, I mean, it's probably up to Feiko and I to say that. No, but I mean, what is also interesting, it is also using a bit of your thinking and your rationale behind. It uses data, but it also uses the stuff that it writes. It uses everything. So it is luckily in line with what you're saying, which is, I believe, a good sign. Not saying that Jasper is a source of truth everywhere in dairy, but he's a young, smart man. Thus, I believe I believe in our Jasper.
Good to
hear. We'll call it a tie so far. The AI hasn't lost yet. Jasper hasn't won yet. We'll continue next week with the new question. Feel free to send us one if you're keen to have it on air.
Perfect.
That brings us, I think, to the end of all of the markets we wanted to cover. There's, of course, a lot of reports come out. You can check them out on Vesper, whether it's the production levels, stock levels, price changes. You can all find them in your dashboard. Next week, because we need a bit more time than the 1 minute we have left, we'll talk about a new big feature that is what we call bring your own data. So the ability to upload your own data points into Vesper. And we'll show you also how you can make multipliers and start really not only consuming data, but also actually working with your own data, your own contract models within Vesper.
Yeah,
if you want to...
I was excited about this one. I thought we were going to get there, but...
Yeah, but we have a minute. It's too big for that, so we'll do that in the next episode. But if you're really keen to learn more about it, it's been used in the last US Weekly report, but also we'll be using it more and more in our reports, which I will give you a quick overview. If you want to read the latest report with all of the latest insights, you can click there on the screen and you'll go directly to it, with also some examples there. But I look forward to that as well. And Jasper is going to give his analyst view on how it works, how he uses it, what makes it interesting. So I'm keen to learn more in 2 weeks' time, Jasper.
Yep, sounds good.
In 2 weeks' time, we'll be there on a Tuesday. It's a big week for us, which you'll hear about more later on. But we'll be there on a Tuesday at this time. You'll receive the invite automatically in your mailbox. You don't need to register again. You'll get it a day ahead of time and an hour ahead of time. You'll get your link. Thank you so much for joining us on this New Year's, the first episode of the new year. Jasper, thank you for your insights. Sebi, thanks for being there.
Thank you.
Participation
Yeah, participation trophy. That's enough. Thanks, everybody.
We'd love to see you in 2 weeks' time. Bye-bye.
Yeah.